Lynn Murray, your reality realtor with Team Different and Prudential Santa Fe. There are some interesting numbers that I believe you should have if you're looking to make a decision to buy a home, and if you're selling a home, you might want to see what a super qualified buyer looks like. So, Debrianna and Richard, can you please give us some of the latest buyer's qualifications?
Well, essentially what's going on is all of the guidelines that are going on with the lenders have gotten a little bit tighter, and the clearest way to look at the whole thing is risk aversion.
Yeah.
So when they're doing a loan, they're looking at the collateral, which of course is the property and the appraisal that goes along with it, and what's sold in the area, so that if something went wrong with the loan, the lender knows that we're able to sell this house, there is a market for this type of property. And then, is a person overly indebted? Are they carrying too much debt? You know, is their income stable? A self-employed person that's going to have to prove 2 years worth of income. You know, so whereas before there was stated income loans and things like that, that's
not like that anymore.
That's fallen by the wayside, basically. And well, it should be. You know, however, there are instances where you may have a borrower who has, and we've had these people that over $1 million or $2 million in the bank, and they are deriving their income from investments, and they've just retired less than a year ago, and the lender says, well, we don't have a 2-year history of him making an income. And you know, they have an 800 credit score, but you know, sometimes we can work through it, sometimes we can't. But Fannie Mae and Freddie Mac have basically just made these guidelines firmer.
Just a little stricter.
Yeah, but obviously there was a time where you would have, even without stated income loans, you would have common sense lending. This is not a person that's going to default. And you can look at the file and see that. However, they don't have the 2 years or something like that, but it's a good loan. That you can't always do nowadays.
Yeah, the pendulum's kind of swung the other way from the days when you could stick a mirror under somebody's nose and see if they were breathing and say, okay, you can have a loan, to now where they're requiring a conventional loan, you need 2 years tax returns, you need 3 months bank statements, you need, you know, to provide all that documentation. FHA can do with 1 year tax return, but everybody else on a conventional loan, you need 2 years tax returns, 2 years history on your job, or especially if you've changed jobs. It's a lot tighter now than it used to be.
It's a lot tighter. Wow, thanks Debrianna and Richard. So, whether you're looking to be a super qualified buyer, or you're looking to sell your home and looking for a super qualified buyer, let Team Different, the super qualified brokers, help you reach your real estate goals. This is Lynn Murray, Team Different, Prudential Santa Fe, live from Mortgage Partners. And remember, success comes in cans, not in cannots.